Camaraderie Agency, term or whole life insurance. Which is best for you? The answer hinges on your situation, what you want your life insurance coverage to do, and what works for your budget. Here are some of the things to think about. Term life insurance pays a benefit to your loved ones if you die during the term period. Whole life insurance covers you for your lifetime and build cash value over time. Benefits. They both guarantee death benefits, which you can use to help protect your family, replace your income, help pay for your funeral, ensure that your children in college funds, also your mortgage. Term life insurance benefits. Lower premium with the same face value that you'll pay for whole life insurance. It can also fit your budget, give you protection, and save you money at the time that you need it. Term life insurance and whole life benefits ability to lock in your premiums, help with your budget. Term life insurance benefits coverage for a specific time period, typically 10 to 30 years, gives protection for a time period. Whole life insurance benefits lifelong coverage, give you protection, and you don't have to worry about your change in health. Term life insurance benefits can convert to permanent life, give you protection and security at the time that you need it. Whole life insurance benefits build cash value, which can access in a time of need. Whole life insurance benefit may pay annual dividends, but is not guaranteed. Term life insurance can help protect you at certain points in your life and help you save money. And whole life insurance can give you the protection and security that you need at the time that you need it the most in your retirement. Whole life and term life insurance can help you protect your family, help you enjoy the time that you spend together, and to leave a legacy. Also, whole life insurance can help you as a parent or grandparent to give a gift of a lifetime to your grandchildren or children. For a free consultation, go to www.camaraderieagency.com or call 224-433-5754. We're also on Facebook, LinkedIn, and YouTube. Next in Camaraderie Agency Life Insurance Series, why do I need life insurance?
Current Health Agency presenting Why People Don't Buy Life Insurance Series. Why don't people buy life insurance? One reason they give is too expensive. The second reason, I have enough insurance already. 3, it's complicated. 4, not enough time. 5, the government won't take care of my family. 6, I do not get sick. 7, I will never die. The Enoch theory. First reason, too expensive. One of the most common myths about life insurance is that it's too expensive. According to the Life Insurance Research Organization, LIMRA, 81% of the uninsured Americans polled said they did not purchase life insurance because it's too expensive. However, the survey also found that the majority of the people overestimated the cost of life insurance by 3 times or more. To illustrate this point, LIMRA's 2022 Insurance Barometer study asked the individual what they felt the price of a 20-year-old, $250,000 level term life insurance policy would be for a 30-year-old person in good health. Surprisingly, the median estimated given by those surveyed was $500, more than 3 times the actual cost.
That means that they could be missing out on the protection they need for all the wrong reasons.
Secondly, I have enough insurance already. Life insurance is not about face value. For example, you have a set amount of income from your paycheck and a lot of priorities vying for a piece of it. There are car payments, rent or mortgage payment, and of course, those student loan payments that seem to stick around long out your last days on campus. But when you think about it, what could happen if you passed away? The real question is, Can you really afford to go without life insurance? If you pass it away, a number of expenses might get passed along to the people you care about the most. First, they will likely be covering the cost of your funeral out of pocket, which the national median cost for a funeral with a viewing or burial is $7,848, and it costs $6,971 for a funeral and cremation in 2021. Secondly, if a relative or significant other co-sign on your house or car or student loans, those debts may become their burden to bear, with the average student debt or per graduate reaching $27,000 in the public and $33,700 for a private 4-year institution. That's a hefty tab to pick up. Number 3, it's complicated.
To some, buying life insurance is complicated, confusing, and well, just no fun. Who wants to think about his or her mortality? But we all know stories of people who had unthinkable happen. They lost a spouse or parent unexpectedly. It is at that time that they wish they had taken the time to sift through the confusing topic.
Cardi Health Agency websites allows you to understand the different life insurance options, as well as having access to a licensed broker. Number 4,
not enough time. If you ask someone how they are doing, the general response is busy. Busy with work, busy with kids, busy with life. Being busy with life makes it hard to squeeze in those not so fun things to do, such as life insurance. Life insurance is usually one of the things that we get done tomorrow. After all, you're not going to die anytime soon because you are young, you are healthy, or just death does not happen to you or your family.
Number 5,
why don't people buy life insurance? The government will take care of my family. The truth of the matter, in the state of Illinois, Department of Human Service, the maximum that DHS will pay is $1,370 for a funeral, $686 for a cremation and burial. If you are receiving some kind of family service in your passing, example, general assistance. In 2020, the Social Security Administration pays survivors a single disbursement of $255 on the death of their eligible family member. So you can't depend on the government to help protect your family.
Number 6,
why people don't buy life insurance? Another reason, I do not get sick. Great. Your health is directly linked to life insurance premium you pay, which will be lower depending on your height and weight, BMI. No matter how great your health condition, we're all going to die. The question is, how will I protect my family? How does life insurance protect my family?
7,
why people don't buy life insurance? I would never die. The Enoch theory. I guess you'll keep paying taxes. It's hard for you to think about your mortality, but that is something that we all have to face. In the Bible, Enoch walked with God, and he was no more, for God took him. Genesis 5:21-24. Even if this would happen to you, how are you going to protect your family? Life insurance will provide income needed to keep alive the dream you have for your children, even when you are no longer here to provide.
Cardi Health Agency offers life insurance to help you protect your family. To learn more about life insurance, go to www.camaraderiehealthagency.com for a free consultation or call us at 224-433-5754. Like us on Facebook and subscribe to our YouTube channel, Camaraderie Health Agency TV. Some people are asking the question, why do I need life insurance? I cannot take it with me. Life insurance is the ultimate gift of love. It's for the ones that you're going to leave behind. With life insurance, your children can remember the good times. Life insurance can help protect your family memories and your family future. Your children do not need to remember the struggles of paying for your funeral and the bills that are left behind. Life insurance can help protect your children's dreams, With Juvenile Whole Life Insurance, you can give them the gift of a lifetime. Introducing life insurance benefits. Life insurance protects your family by replacing your family income at the death of a spouse, by covering the final medical and burial expenses, freeing dependents or family from the burden of debt when a spouse dies, providing for the welfare of the children and the cost of higher education in the event of a spouse passing. Life insurance protects your memories by safeguarding your children's memories and dreams. The question is, why not life insurance? For a free consultation, call us at 224-433-5754 or go to www.camaraderiehealthagency.com. Follow us on Facebook, connect with us on LinkedIn, and subscribe to our YouTube channel.
Offering Juvenile Whole Life. The gift for a lifetime. The love grandparents show for their grandchildren comes in stories, tidbits of wisdom, cookies, and of course hugs. What about juvenile life insurance through Camaraderie Agency? It's a gift of love and protection that will last a lifetime. Let's talk. Reach out today. You go to www.camaraderieagency.com. Typical question. I have life insurance on the job and my kids are young. Why do I need to get life insurance? If you lose your job, your benefit may be lost. Life insurance is cheaper when they're young. If your children's health changes in the future, they always have life insurance. Cash value to help with college expense. When you purchase a juvenile whole life policy for your child or grandchild, you guarantee regardless of what the career they choose or their health, whether they choose to be a policewoman, fireman, or soldier, or a doctor, or airplane pilot, or regardless of their health, they always have life insurance. Even if they become an astronaut or they think they can fly. For a free consultation, go to www.camaraderieagency.com or call 224-433-5754. We're also on Facebook, LinkedIn, and YouTube.
Camaraderie Health Agency, what are your thoughts about life insurance? Some people say, I am too young. I may not use it. Sarah is excited about shopping for a new outfit. She has a special occasion that she want to go to, and she wants a new outfit just for that occasion. She's going out to meet a few friends at a club. Sarah is planning on returning the outfit after this special occasion. A study shows that nearly half, 46% of Americans think returning clothes while to wear once should be illegal, also known as wardrobing. But with return of premium life insurance, you don't have to worry about that. Sarah can return the outfit, still have a return fee on all merchandise. But if Sarah will buy term life insurance with a return of premium ROP option, not only she can enjoy having higher face value at a lower premium, she can get the protection for the time that she needed the most, then enjoy getting her premium back minus a fee without the stigma which is associated with wardrobing. So let us look at an example for Sarah of what a return of premium policy will look like. For example, we are looking at two policies. One based on Sarah age 26, $250,000 term life insurance policy, and a policy with return of premium ROP rated as a preferred non-tobacco will cost for a normal term policy to age 65 will cost $25.74 a month, or $292.50 annually. Sarah would get back $0 at the end of the term. The other policy, Term Life with Return of Premium ROP to age 65, would cost $28.30 per month or $340 annually. Sarah will get back $10,920 at the end of the term. So for $2.58 extra a month, Sarah is able to protect her family at the time that she needed the most. Sarah will have cash value at the end of the term. To learn more of how Term Life with RP can work for you, go to www.camaraderiehealthagency.com or call 224-433-5754. Time is precious. Planning now makes good financial sense. Problem: the last thing you want loved ones to say when planning your final arrangement is, "I cannot afford this." Grieving takes an emotional toll, and it can be even more difficult when there's a financial burden. Solution: final expense insurance is all about helping you plan ahead. It's never easy to think about what life will be like for your family after you are gone, but planning now can help your loved one focus on the life you live and less on your final expenses. Facts: the top 3 reasons to purchase or not to purchase more life insurance are: they have other financial priorities. 67% is too expensive. 65% they don't feel they need it. 56%. More than half of American adults, 50%, own some type of life insurance. Why do Americans own life insurance? The top reason for owning life insurance are: paying for burial costs and final expenses is 84%. Transferring wealth across generations is 60%. Replacing lost wages or income is 62%. And supplementing retirement income is 57%. Did you know the average cost for a funeral is over $9,420? The cost does not take into account cemetery, monument, or market costs or miscellaneous cash advances charges such as flowers or an obituary. Fortunately, we can help. Carnegie Health Agency offers final expense insurance, helping you to plan ahead, allowing you to spend more time with the ones you love. Learn more at www.camaraderiehealthagency.com or call 224-433-5754. Like us on Facebook, LinkedIn, and YouTube. Camaraderie Health Agency Whole Life Insurance Series 2, Universal Life Insurance. With life insurance, it pays to get started early. Protection for your family. Life insurance is important. It can help you protect your family, but there's a lot to consider before settling on a policy type. If you like the flexibility and the potential for cash growth, you might decide that universal life insurance is a good match. Universal life insurance is a type of permanent life insurance. Unlike term life insurance, which is written to cover a specific period of time, universal life insurance can provide lifetime coverage. Universal life insurance provides the certainty of permanent coverage while maintaining the flexibility to meet your family's changing needs. Life insurance is there to protect your savings and guarantee that you leave something to your loved ones after you die. You deserve a policy to protect what you already have and build value without exposing you to unnecessary risk. Beyond the death benefit, the cash value. Life insurance provides a death benefit that is paid to beneficiaries upon the death of the insured. This death benefit is what most people think of when they consider life insurance. If you already talking about term life insurance, death benefit is the whole point of purchasing insurance. Universal life insurance, however, is different. Although the death benefit is an important part of the coverage, for many policyholders, it's not the only element. In addition to the death benefit, universal life insurance builds a cash value. This cash value accumulates interest, and the cash value growth enjoys a tax-deferred status. Once the cash value reaches a certain level, the policyholder will be able to access it by withdrawing funds or by borrowing from the policy. Loans are typically not taxed. If a loan is not repaid, the death benefit will be reduced. Universal versus whole life insurance. Whole life insurance is another type of permanent life insurance. At first glance, universal life insurance and whole life insurance can seem pretty similar. However, there are some key differences, and many of these differences come down to the flexibility and risk. While whole life insurance has fixed premium, universal life insurance has adjustable premium. By paying more, the policyholder builds up a larger cash value. Because the cash value accumulates, the interest that can be used to pay premiums in the future or withdrawing or borrowed as needed, this can be desirable. When funds are tight or after reaching retirement, the policyholder may be able to decrease the premium. The policyholder may even be able to skip premium payments. It is important to make sure that the premiums are sufficient to keep the policy active. But if a sufficient cash value has occurred, the cash value can be used to cover the required premiums. With universal life insurance, the death benefit can also be adjusted. This flexibility can help the policyholder manage changing needs. Universal life insurance policy variations. Universal life insurance is one type of life insurance, but policies aren't all the same. There are actually different types of universal life insurance policy. These differences can be substantial, so it's important to know what kind of universal life insurance policy you are considering buying. The advantage of universal life insurance. Many people consider universal life insurance to be an attractive option because it offers the following advantages. The policy builds a cash value that can be accessed during the policy's life. For example, through a loan or withdrawal. The policyholder can adjust the premium payments as long as the payments are sufficient to keep the policy in force. If the market performs well, the cash value will grow accordingly. This can result in substantial gains. The death benefit can be increased, providing a greater benefit to the policy heirs. Cash value growth has a tax-deferred status. Life insurance policy loans and death benefits are also typically tax-free. The disadvantages of universal life insurance. Although the flexibility of universal life insurance can be attractive, there are some downsides. Before purchasing a universal life insurance policy, it is important to consider these disadvantages carefully, as some of them could result in the lapse of your policy or a reduction in benefit. The policyholder may need to pay various fees before purchasing a policy. Understand the costs involved. Market losses may reduce the cash value. This can result in substantial losses. The death benefit may be decreased. This means you might leave your heirs with less than you inherited. The policy will lapse if the premiums are not maintained and there's not sufficient cash value to cover the missed premiums. How does universal life insurance work? Access to cash value. Universal life insurance accumulates cash values that earn interest at a current rate with a safety net of a guaranteed minimum rate. The policy cash value grows on a tax-deferred basis, so earnings can be built up faster. If needed, you can borrow against your policy cash value or make partial withdrawals, usually for any needs that may come up, such as emergency, college tuition, supplemental retirement income. For a free consultation, call 224-433-5754 or go to www.camaraderiehealthagency.com. You can connect with us on LinkedIn, follow us on Facebook, subscribe to our YouTube channel. I remember growing up on the south side of Chicago. I cannot count how many gifts that my parents bought for me for Christmas that lasted more than a year. As a parent and a grandparent, you probably bought a gift or two for your children or your grandchildren, right? Probably what you discovered that what they did not break, eat, or spend, they outgrew, right? Juvenile Health Agency has a way that you can buy a gift that can last a lifetime. Something that you will always be remembered for. We'd like to share it with you. Juvenile Whole Life Insurance. The gift for a lifetime. The love grandparents show for their grandchildren comes in stories, tidbits of wisdom, cookies, and of course hugs. What about juvenile life insurance through Camaraderie Agency? It's a gift of love and protection that will last a lifetime. Typical question. I have life insurance on the job and my kids are young. Why do I need to get life insurance? If you lose your job, your benefit may be lost. Life insurance is cheaper when they're young. If your children's health changes in the future, they'll always have life insurance. Cash value that help with college expenses.
Finally, the reason for Juvenile Whole Life insurance. It is one of the ways that parents and grandparents can build a financial foundation for your children and grandchildren, helping you to leave a legacy for your children and grandchildren. When you purchase a Juvenile Whole Life policy for your child or grandchild, you're guaranteed, regardless of what career that they choose or they help, whether they choose to be a policewoman, a fireman, or a soldier, or a doctor, or airplane pilot, they will always have life insurance, even if they become an astronaut or think they can fly.
For a free consultation, go to www.camaradiereagency.com or call 224-433-5754. We're also on Facebook, LinkedIn, and YouTube.
Thanks everyone for coming out today. My name is Ben Washington. I am the principal agent with Camaraderie Health Agency. Most of you came here to learn more about life insurance, but I'd like to ask you, regardless of your marital status, if you were to pass away, who would pay for the funeral and the burial expenses? Also, what would be the financial impact to your family? Carnegie knows that you don't want your family to have to stress with the finances, but remember the good times. So this is why Carnegie Health Agency like to present this most powerful video, the final loving act, a life insurance policy. To start the Life Insurance Awareness Month, which starts in September.
We don't tell the right stories. Or when we do, we tell them wrong. We focus on the wrong parts. Like there's a story we like to tell ourselves about life. In the story, we will grow up, go to college, have a career, get married, have a family, grow old, and when, after a very long life, it is time to get our affairs in order, life will let us know. As if death will be so kind as to warn us. He will inform us, like when at the end of a trip, a text arrives, an alert to our phone that says, say your goodbyes, tend to your home, contact your lawyer, settle your affairs. We believe that story to be true until we are blindsided by heartbreak that seems so unfair. Beneath so much debt, it is a struggle just to get air. Everything was fine, and then out of nowhere, the phone rings. A siren wails. We crash straight into a doctor's chair. As the hair on our neck stands up, we stand up unprepared as she pulls the air from our lungs so we can't speak. We listen as she says the words, critical condition, terminal, hit and run. It's in his lungs. You are dying, and there is nothing to be done. And when we tell the story of life insurance, that's the story we tell. We focus on death, the tragedy, the sadness, but that's telling it wrong. And I'm not saying there isn't pain or heartache or sacrifice. Of course there is. That's life. I mean, those things happen for the same reasons tooth fairies and sunsets and great wine and grandchildren happen. And that's life. It's not that the tragedy isn't there. It's that it isn't all that's there. I mean, there's so much more. I mean, in all this hopelessness, hope is. But to see it, we have to shift our focus. Like standing in the middle of a burnt out forest, only we don't notice. Instead, we are drawn to where a perfect blue crocus lifts up its head to remind us that on the most tragic days, after we are dead and gone, life will find a way to go on. I mean, sometimes what happens in a moment stays with us for years, and yet the living must lift the head. Persevere. That is why at some point in the middle of all those tears, a laugh and a memory finds its way out. And when it is needed most, a check appears with a memo line that may as well read, "Despite the fact that my body is no longer here, I still am. My love lives. Even though I don't, my presence will be present. Even though my body won't. As sure as death is part of life, life is also part of death. So when your last exhale will wait no more, your loved ones will pick it up from the bottom of your lungs, place it lovingly onto their own, and complete your breath. The heart can stop beating, even as it refuses to. The body can stand tall, even as it is laid to rest. But it will only if you choose to ensure that a check will check on them on your behalf for years after you've left, because the answer is no. When the question is, are you interested in preparing for your death? But when the question is, do you want to take care of your family? The answer is always yes. If you ask my dad about dying, he will tell you he doesn't worry about his final resting place. He worries about my mother and paying the mortgage so she will finally have a place to rest without worry. My friend told me he had one thought as his son raced to the hospital at 3 a.m. with him in the back seat struggling to breathe. He thought, what will happen to my son if I die? I mean, that's life. He told me later. He said, that's how it works. Real love means it happens to you both. We don't buy car insurance for when we get hit. We buy it for when we hit someone. We don't buy life insurance for when we die. We buy it for when they don't. We buy it because when we love someone, we want to protect them from any added despair, any hardships that can be spared, to experience the happiest moments, even when we won't be able to experience them beside them. And it gives us comfort to know if we aren't able to have those moments, we can provide them. I mean, moments like walking down the aisle, right? Or the first grandchild born, moving into your new dorm, eating together as a family, hanging pictures on the wall of your first home. In all of those moments, Dad is here, Mom is with us, Ethan lives. It is because of Susan this was possible. In all of those moments, we are none of us alone. This is not about memories, but what our lives are able to become. This is about understanding that when you love someone, you do whatever you can to help them, to hold them, to enfold them in the truth of this immutable fact. Life insurance is the final loving act of a person who at the end didn't see flashes of his own life. Instead, he saw the future he wanted for his parents, his kids, his wife, and he knew that if their pain could somehow be lessened, their load perpetually lightened, then perhaps their grief will be less sharp than it might have been. And by preparing for what might be, despite being frightened, it's like taking your loved one softly by the wrist, holding out the life insurance as a gift and saying, This is for all the flowers I would have bought. These are pennies for all of our children's thoughts, the mortgage for the house we finally got. I don't know if it's enough, babe, but it's a lot. Please use it to make the life we dreamed about exist. And if our kids ever wonder if I love them, you give them each a kiss while clenching this life insurance policy in your fist, and you tell them there is no doubt he loved us. He did this.
For a free consultation, go to www.camaraderiehealthagency.com.
We invite you to follow us on Facebook, LinkedIn, Instagram, YouTube, and Twitter.
Camaraderie Health Agency, Life Insurance 101. No one really wants to think about life insurance, but if someone depends on you financially, it's a topic you can't avoid. Getting life insurance doesn't have to be hard or boring. We have some answers to common questions about life insurance so that you can make informed decisions about protecting your loved one financially. Why is life insurance worth it? There are many answers to the question of why is life insurance important, but by and large, the most important one is ensuring your family's financial security and peace of mind. If anyone depends on your income, they will most likely struggle if you were to pass away. That's why life insurance is so important to have. There are different types of life insurance policy, but essentially, they all pass cash to your loved one when you die. Money from life insurance can be used to cover daily living expenses, a mortgage or rent, payments, outstanding loan, college tuition, and other essential expenses. Life insurance is the best way to ensure that your loved one would be in a good financial place if you and your income were no longer in the picture. What does life insurance cover? Life insurance covers virtually any type of living expenses. Some common expenses include immediate expenses, funeral and burial costs, uncovered medical expenses, mortgage or rent, car loan, credit card debt, taxes, estate settlement costs, ongoing expenses, food, housing, utilities, transportation, healthcare and insurance, continue your family business, future expenses, college costs, retirement. Do I need life insurance? If someone depends on you financially and you are most likely someone who needs life insurance provides cash to your family or loved one after your death. This cash is known as the death benefit. Replaces your income and many non-paid ways to support your household. Your family can use the cash to pay for expenses like funeral costs, a mortgage, college, tuition, and more. Just a few examples of people who often answer yes to the question of should I get life insurance include married or partnered couples. Many partners find it difficult to make ends meet without the other earner's income in the picture. Married or partnered couple with kids. In addition to losing one partner's income, the surviving parent may have to pay for child care and more without other parents around to pitch in. Empty nesters. Many surviving partners will not be able to maintain the lifestyle they worked so hard to achieve without life insurance. Retirees. Depending on the size of your estate, your heirs could be hit with an estate tax rate up to 45%. Fortunately, cash from life insurance policy gives heirs access to tax-free money to pay for immediate costs and more. Do I need life insurance? Single parent. As a sole income earner for your family, you will want to think about how to replace your child's only source of financial support. Stay-at-home parents. From cooking meals to shuttling kids to school to helping with homework, stay-at-home parents perform many critical responsibilities that will be costly to outsource. Business owner. Life insurance can help your business in many ways if you are a fellow owner or a key employee were to pass away. What are the different types of life insurance? The type of life insurance generally falls in two categories: term life insurance and permanent life insurance. Term life insurance provides protection for a specific period of time. The term is often 10 to 20 or 30 years. Term life insurance makes sense when you need protection for a specific amount of time. For instance, until your kids graduate from college or your mortgage is paid off. Term life insurance typically offers the most amount of coverage for the lowest initial premium. This makes this type of life insurance policy a good choice for those on a tighter budget. What are the different types of life insurance? Permanent life insurance provides lifelong protection for as long as you pay the premiums. It also accumulates cash value on a tax-deferred basis, which you can tap into to buy a home, supplement your retirement income, cover emergency expenses, and more. Because of these additional benefits, initial premiums are higher than what you pay for a term life insurance policy with the same amount of coverage. You might want a mix. Depending on your circumstances and financial goals, sometimes a combination of term and permanent life insurance is the answer. Get an idea of the type of life insurance policy that could work for you by contacting a licensed broker at Camaraderie Health Agency. To learn more about life insurance, go to www.camaraderiehealthagency.com for a free consultation. Call us at 224-433-5754. Go to our YouTube channel or LinkedIn or Facebook. Part of Camaraderie mission is to help you manage your financial risk. That is why Camaraderie Health Agency is featuring disability income insurance plan. Thanks everyone. We're going to get started with disability income insurance. Ask yourself this question: what if I miss a paycheck? If the thought is already sending you down a spiral, hold up. Yes, missing a paycheck is a less than ideal situation, but you need to have an action plan in place before it happens. If that sounds familiar, you are not alone. A new study from NORC at the University of Chicago, an independent social research institution, found that 51% of the working adults in the United States would need to assess their savings
to cover the necessities if they missed it more than one paycheck. Millions of middle-class Americans are just one missed paycheck away from poverty, with 4 out of 10 considered liquid assets poor or without enough money to sock away cope with even a sudden disruption in income. Like most Americans, it's simple. You need your paycheck. Have a plan protected with disability income. It's simple. You need your paycheck. It allows you to pay your bills, save for the future, and enjoy your family. What if you would become sick or hurt or totally disabled? What if you could not work to earn your income? Disability Income Insurance, Carnegie Health Agency. Through disability income from one of our highly rated carriers, we can help you protect your income that you rely on. It is simple to design the right kind of plan to fit your needs to protect your most valuable asset. Question 1. How much do you need to cover your basic monthly expenses? Question 2. How long might you need disability income benefits to last? Question 3. How long could you go without a paycheck? Let us take a look at these 3 questions in detail. How much do you need to cover your basic monthly expenses if you were hurt or sick or totally disabled? There is a way to pay your basic monthly expenses. We can look at a plan that you can cover to pay your mortgage, utility, or grocery. DI can help cover your basic expenses. How long you might need your disability income benefits to last. A plan can be built to meet your specific needs and budget. 2 years coverage is usually affordable and can give you the time that you need to evaluate your options. You want to give yourself the time to recover and not rush into life decisions that might have a lifelong effect. Question 3. How long could you go without a paycheck? Is it 1 month? Is it 2 months? How long can you go without a paycheck? Is it 4 months? Disability income can help. It's simple. You need your disability income. Just over 1 in 4 of today's 20-year-olds will become disabled before they retire. Accidents are not usually the culprit. Back injuries, cancer, heart disease, and other illness cause the majority of long-term absences, which means that they are not covered by workers' compensation. Nearly 3 in 10, 20% of U.S. adults have no emergency savings. According to the Bankrate latest Financial Security Index, 1 in 4 have a rainy day fund, but not enough money to cover 3 months' worth of living expenses. Just 18% of Americans said that they could live off their savings for at least 6 months. That's the lowest percentage of people with adequate savings cushion in 9 years, conducting Bankrate's poll. Just 1 in 4 of today's 20-year-olds will become disabled before reaching age 67. 68% of private sector workers have no long-term disability income. Help protect your income with disability income insurance, DI, from one of our highly rated carriers.
Contact Carnegie Health Agency to learn more. 224-433-5754 or go to www.camaraderiehealthagency.com. Like us on Facebook, LinkedIn, YouTube, Instagram. Thanks everyone for attending.
You are required to purchase auto and house insurance. When was the last time that you reviewed your cancer insurance? Cancer insurance is just important because unfortunately cancer touches almost everyone at some point in their lives. Either you know someone or you have been affected by cancer. And everyone's story is unique, especially when it comes to cancer treatment. In 2023, they forecast 1,958,310 new cancer cases and 609,820 cancer deaths to occur in the U.S. The greatest number of deaths expected are from cancer of the lung, prostate, and colorectal in men and cancer of the lung, breast, and colorectal in women. How many new cases of cancer will we see in the U.S. in 2023? In 2023,
roughly 2 million people will be diagnosed with cancer in the United States. An estimated 297,790 women and 2,800 men will be diagnosed with breast cancer, which makes it the most common cancer diagnosis. Millennials were the most likely to avoid care due to costs at 31%, according to a survey released last year that also looked at how costs affect medical decisions. Overall, a quarter of Americans choose to forego medical care because of cost. Nearly 1 in 3, 30% people in 2023 have some emergency savings, but not enough to cover 3 months of expenses. This is up from 27% of people in 2022. Nearly 1 in 4, 22% U.S. adults say they have no emergency savings. It's also some 56% of Americans are unable to cover an unexpected $1,000 bill when saving, according to a telephone survey of more than 1,000 adults. Why the need for cancer insurance? Cancer care costs in the United States are projected to exceed $245 billion by 2030.
People feel comfortable because they know they have group insurance, they have health insurance, they have Medicare Advantage, and they have supplement plans. And they say, don't my health insurance pay for the cost if I'm diagnosed with cancer? Yes.
It doesn't cover all the costs.
Why the need for cancer insurance? Medical costs are only part of the pie. Not only do you have medical costs, you have household costs and additional costs. You have medical insurance, but you have additional costs like deductible, co-pays, co-insurance, out-of-network costs, experimental treatment. You got household costs, lost of income, housing, utilities, and groceries, and child care, car payments. You have additional costs that you need to travel because of cancer care. You need travel, lodging, meals, home modification as a result of your cancer, special diet, pet care.
Product cancer insurance. How does it fit in your need? The following are some of the benefits for the care and the treatment that are included in a policy offered by a Camaraderie Health Agency.
Hospital benefit, surgical benefit, treatment benefits, transplant benefits, chemo and radiation benefits, travel benefits, waiver of premium, family care benefits, lump sum, and return of premium. It allows your family knowing that you are covered. It gives your family a peace of mind.
With cancer insurance, you are paid directly, which can help with the medical, household, and additional costs,
so that you can focus on your recovery and not your finances. These plans pays daily benefits of $100 to $700. Some of them pay on a schedule, pay you as the event occurs. The amount may vary. Some pay a lump sum, $5,000 to $100,000, give you the financial protection that you need.
For a free consultation, go to www.camaraderiehealthagency.com or call us at 224-433-5754. Like us on Facebook. Subscribe to our YouTube channel called Camaraderie Health Agency TV. On the road to life, life happens. At Camaraderie, we know that your goal is to protect your family. On the road to life, life happens. The cost of protecting your family may not be as expensive as you think. Let's look at the Market family. Camaraderie has a solution for those who want to have financial protection when unexpected happens. Joe's market goal is to protect his family. We offer him a family solution. Joe is 32, so we offer him a 20-year term policy with a $250,000 death benefit. Joe's wife, Sheila, is 31, can be protected with a 20-year other insurance term rider with $250,000 death benefit. And Joe's son, Andy, 9, and his daughter, Sue, 7, can also be covered with a child rider for $20,000 each. The Market family can have $540,000 coverage for $48.80 a month. So Joe is able to protect his family for less than an average price of coffee for a month. Joe now has a peace of mind if something happened to him and his wife, that the children's college fund will be secured and his mortgage will be paid. Sometimes life can be tough, but you can still have some fun. Come on and help you protect your family, helping you enjoy life. With life insurance, it pays to get started early. The sooner you apply, the less you pay. Did you know that life insurance premiums goes up with age? With Carnegie Health Agency, juvenile, adult, and whole life insurance carriers, you can enjoy these benefits. Save money. Premium that will never increase over time, regardless how your child ages and health changes. Have different ranges of face values. Also, cash values. Accumulate cash value that increases over time after initial premium policy years. To learn more, for a free consultation call 224-433-5754 or go to www.camaradehealthagency.com. You can connect with us on LinkedIn, follow us on Facebook, and subscribe on our YouTube channel. Some people have a small business like a dental office, but people are not always excited about coming in. Carnegie Health Agency is a small business. So we know when a small business owners are unable to work due to illness or injury, we know there is more at stake than just your personal obligation. Carnegie Health knows that you have ongoing business expenses, such as rent, utilities, employee salaries, and property taxes and payroll taxes, and cannot be forgotten. So that is why Carnegie Health Agency sells business expense disability income insurance and personal disability insurance to protect your business and personal income. So let us look at an example of who can use business expense and disability insurance. Joe can use business expense and disability insurance to protect his electronic shop. He can have the peace of mind if he becomes sick or hurt and unable to work. He will be able to pay his business expenses and personal bills through B&E and D&I insurance. Example, C's Salon. C's understands the importance of doing a great job. C's Salon enjoys making their customer look good and feel great, and being able to wash, to cut, to trim, and to style, and color conversion. Also, to be able to compensate and more is vital to her livelihood. So what happens when C is unable to work due to illness or injury? How will C pay the bill? Business expense, B&E, and disability insurance, D&I, can help with the salon bill and personal bills such as the mortgage, utility, and grocery. Another example, Ben's Barber is a mainstay in the community, providing great cuts. Of course, great place to keep up on what's going on in the community. But what would happen when Ben is no longer able to work due to illness or injury? Who is going to pay for the inventory, the bills, also for his mortgage and utility and groceries? Benji, what are you doing here? You don't need a haircut. Business expense insurance and disability insurance can help you keep your business afloat in the time that you need it the most for a price that may be a little bit less than what you think. Benji, stop crying. I told you didn't need a haircut. Benji, look, I got you this ice cream. Stop crying. Carnegie Health Agency, serving Illinois, Minnesota, Texas, and Wisconsin with our product and service. We know protecting your family is essential. With life insurance, you can protect your family. Also, Carnegie Health Agency has Juvenile Whole Life. that you can give your child or grandchild a gift that can last a lifetime. Current Health Agency, love to see you smile. When was the last time you had a benefit checkup? Current Health Agency, working to protect your family. Call Current Health Agency in Washington at 224-433-5754. Subscribe to our YouTube channel and like us on Facebook. As a father, you'll always want to be there for your kids. Your kids will always remember the time that you took them fishing. As a father, you want to give your kids the world. Your kids will remember the long walks that you took with them. As a father, you want to take time and listen to your children's ideas and problems. They will remember the time that you spent with them at the pool when you went on vacation. As a father, you want to be a role model to your kids. Your kids will remember when you took them on a camping trip. As a father, you realize that your job is never done. Your kids will remember the time that you took them to the circus so that they can have some fun. As a father, you may not be able to give them the world, but you can give them a gift that can last a lifetime. It can even double in value. They will always remember. Your kids will always cherish the time that you spent with them, but they always will remember the gift of love with Juvenile Whole Life Insurance. For a free consultation, go to www.camaraderiehealthagency.com.
We invite you to follow us on Facebook, LinkedIn, Instagram, YouTube, and Twitter.
Current Health Agency present Health Insurance Marketplace 101. Hello everyone, my name is Ben Washington. I'm the principal agent with Conrad Health Agency. I'm here to talk about health insurance in the marketplace. So step back and relax. Health insurance is expensive and can be hard to afford depending on your income, especially if they are not offered health benefits at work. The solution the Affordable Care Act, ACA, provides for sliding scale subsidies to lower premiums and out-of-pocket costs for eligible individuals. There are two types of subsidies available to marketplace enrollees. First one is a premium tax credit, work to reduce the enrollee's monthly payment for insurance coverage. The second one is a finance assistance. The cost-sharing subsidy is designed to minimize enrollees' out-of-pocket costs when they go to the doctor or have a hospital stay. How to qualify? Must enroll in a plan offered through the health insurance marketplace. The premium tax credit, PTC, reduces enrollee monthly payment for insurance plans purchased through the marketplace. The marketplace plans are offered in 4 metals. Bronze, this is the lowest premium but have the highest deductibles. You have the silver, most sharing subsidy are only offered through silver plans, and the gold have a higher premium but lower deductible. The platinum, highest premium but very low out-of-pocket costs. Catastrophic health plans with lower premiums and higher cost sharing compared to the bronze plans are available for individuals younger than 30, and premium tax credits are not available. Who is eligible for premium tax credit? In order to receive premium tax credit for coverage starting in 2022, a marketplace enrollee must meet the following criteria: have a household income at least to the federal poverty level, FPL, which for 2022 will be based upon 2021 Poverty Guidelines Table 1. No affordable coverage through an employer or family member employer. Not eligible for coverage through Medicare, Medicaid, the Children's Health Insurance Program, CHIP, or other forms of public assistance. U.S. citizenship or proof of legal residency. Lawfully present immigrants whose household income is below the 100% FPL can be eligible for tax subsidy through the marketplace if they meet all the other requirements. If you are married, you must be filed taxes jointly in order to qualify. Who is eligible for a premium tax credit? For the purpose of the premium tax credit, household income is defined as the modified adjustment gross income, MAGI, of the taxpayer spouse and dependents, such as wages, salary, foreign income, interest, dividends, and Social Security. Depending on how your estimated income falls on the federal poverty level, FPL, determine how much cost share reduction. Those incomes that fall between 100% of the FPL to 150% of the FPL have a accrual value of 94%, which their cost share is better than a platinum plan. And for those whose income falls between 150% of the FPL to 200% of the FPL, will have an AV of 87%, which is nearly as good as a platinum plan. Also, if enrollee income falls between 200% of the FPL to 250% of the FPL, will have a AV of 74%, which is better than the normal for a regular silver plan. What amount of premium tax credit is available to people? The PTC works by limiting the amount an individual must contribute towards the premium of the benchmark plan or the second lowest cost silver plan available in individual in their marketplace. This required individual contribution is set on a sliding income scale. In 2022, for individual with income up to 150% of the FPL, the required contribution is 0. Income of 400% FPL or above, required contribution is 8.5% of the household income. See Table 2. The cost structure of a health insurance plan. You have a premium, deductible, co-insurance, copay, and out-of-pocket limit. For 2022, the plan year, the out-of-pocket limit for a marketplace plan can be no more than $8,700 for an individual and $17,400 for a family. The plans that are on the marketplace, the exchange, going to have one of two types of cash flow, where you will pay your premiums, co-pay for some of the service. For other services, you will have to meet the deductible, then pay a co-insurance. After you meet your out-of-pocket limit, which includes the amount that you pay for your co-pay, deductible, co-insurance, the plan will pay for 100% of your medical costs. The other cash flow, number 2, you will pay your monthly premium, you will meet your deductible before you start paying for co-pays and co-insurance for services. And for the plan pays 100% of you must meet the out-of-pocket limit, which includes the deductible, co-pays, and co-insurance. You can see from cash flow for type 1 plan, you have lesser cash flow out of your pocket than for cash flow for plan type 2. For a free consultation, go to www.camaraderiehealthagency.com.
We invite you to follow us on Facebook, LinkedIn, Instagram, YouTube, and Twitter.